All right, welcome to today's lesson. We're going to roll up our sleeves and do something super practical. Together, we're going to build a clear, step-by-step trading plan for a stock that's in a really interesting spot. And listen, the goal here isn't just about this one stock. It's about showing you the process so you can start to build these plans for yourself.
So let's just dive right in. Imagine you're looking at the chart of Walmart right now, ticker WMT. What's the first thing that jumps out at you? You see this great, well-known stock, and it's suddenly dropping. So here's the big question, the one we always have to ask. Is this a trap, or is this an opportunity? Now, as traders, our job isn't to guess. Our job is to build a plan to figure out exactly which one it is.
Okay, first things first. Before we even think about where we might buy or sell, we gotta set the scene. We have to understand the environment we're trading in. You'll hear this 1,000 times, but context is everything, especially when you know there's some choppy water ahead.
And this week, well, it's a bit of a minefield for this stock. You've got two huge events that could really shake things up. First, the big one, the Federal Reserve's interest rate decision. You know how it is, the whole market just kind of holds its breath for that. But second, and this is pretty weird for a company as big as Walmart, it's actually switching from the NYSE to the Nasdaq. That's not something you see every day, and it can cause some really unpredictable price swings. So the bottom line is, we know going in that things could get volatile.
All right, so we've established that the environment is pretty tricky this week. So what's the next step? We zoom out. We have to take a step back from the day-to-day noise. Before you ever look at the short-term chart, you've got to understand the overall trend. Where has the stock been, and where is it going, big picture?
And if you pull up a longer-term chart, say a one-year chart, the story is crystal clear. It's been in a beautiful, strong uptrend. I mean, no doubt about it. This has been a bullish stock. But look at where we are right now. See that? The price is pulling back. It's in a correction, just taking a little breather. Our entire game plan is based on one key assumption, that this is just a pause, and that the main long-term uptrend is still good.
And this leads us to maybe the most important concept you'll learn today. We call it the safety valve. Seriously, this is everything. Before we even think about buying, we have to define our line in the sand. I want you to literally imagine drawing a bright blue line on your chart. This is our make or break support level. If the price stays above it, our plan is valid, we're good to go. But if it breaks below that line, the entire plan is invalid. We just walk away. No emotion, no second thoughts. That's your safety valve.
So how do we put all this together into an actual game plan? Well, the key word, the one I want you to remember, is patience. We are not going to chase this stock down. We're not going to jump in just because it feels cheap. No, we're going to be disciplined. We are going to be patient and let the price come to us, to the exact level that we've decided on ahead of time.
Our strategy is really simple, just 3 conservative steps. Step 1 is easy. We wait. We literally do nothing. We sit on our hands until the price drops into what we're calling our golden zone. Step 2, we look. Okay, once the price is in our zone, we need to see some proof that the buyers are actually showing up. We're looking for a specific type of confirmation candle on the chart, maybe something like a green hammer candle. That tells us the selling might be over. And only then, only after we see that proof, do we move to step 3, execute the plan with discipline.
All right, now this is the part where you really need to lean in. Get ready to write these numbers down, because these are the exact price levels for our educational exercise. So this is the heart of the plan right here.
Okay, our virtual entry zone, our golden zone, is the area between $105 and $106. Let me repeat that. We are waiting for the price to come down into the zone between $105 and $106. That is where we start looking.
And here it is, the most important number on the screen. This is our safety valve, our absolute line in the sand. If the price closes below $101.90, the entire plan is invalid. I'm going to say that number again, $101.90. If it breaks below that, our theory is wrong, the uptrend is likely broken, and we are out.
Okay, now for the good part. Let's say the plan works. The price comes into our zone, it bounces, and starts heading up. Our first educational target, where we'd look to take some virtual profits, is $116.20. So that's target number 1, $116.20.
And for the rest of the position, if the trend really has legs and keeps running, our second educational target is up at the nice psychological level of $121. Again, educational target 2 is $121.
So here it all is, the whole plan summarized on one slide.
You can see the entry, the safety valve, the target. But here's what I really want you to see. Look at the risk versus the reward. The risk, which is the distance down to our safety valve, is about $4.10, but the reward, just to our first target, is over $10. That means we're looking at a reward that's about 2.5 times bigger than our risk, and that is the kind of setup a professional trader looks for.
Okay, we're almost done, but this next part is crucial. A professional doesn't just plan for how they're going to win. They have an exact plan for what to do if they're wrong. So let's talk about the only two possible outcomes here and how we'll handle each one.
It's really straightforward. There are only two ways this can go. Scenario A, you get stopped out. The price breaks our safety valve. It happens, the market changed its mind. We accept that small, managed loss that we planned for from the very beginning, and we move on. No getting emotional, no revenge trading. Then there's scenario B. The plan works. The price hits target 1. Awesome. We follow the plan, we sell half to lock in some gains, and we let the rest run toward target 2. The goal is to follow the plan perfectly, no matter which way it goes.
Just a few final but really important reminders on mindset. First, because there's all this news volatility, you're going to reduce your practice position size, maybe cut it in half. We want less risk. Second, you want to use a limit order to get the specific price you want. And third, don't use a super tight stop loss on this one. You got to give the trade a little room to breathe with all that's going on. But really, the most important thing to remember is this: following the plan perfectly is the win. The outcome doesn't matter as much as the discipline.
And of course, we have to end every lesson with this very important disclaimer.
So please, just remember, this entire walkthrough is a practice exercise. It is for training and educational simulation only. It is absolutely not financial advice. The whole point here is to learn the process of building and following a plan. So now your homework is to go pull up a chart of Walmart, mark up these levels we talked about, and just watch what happens. That's how you learn. We'll see you for the next one.